My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. If you want to make friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and explain what the heck is going on. So call me, 1-800-743-CNBC. Tweet me at Jim Cramer. It's earnings season. That means we need to figure out the haves, which will most likely make money after reporting great numbers, and the have-nots, which will most likely blow it. Incredibly, I already have the two lists. Not so hard to tell. Just look at today's action with the Dow advanced 48 points, S&P gained 0.85%, and the tech-heavy NASDAQ jumped 1.58%. To be sure, we got a soft producer price index number today, which made stocks more viable, but it's the same ones that are viable over and over and over again. That was easy. Tonight, you're very lucky, you viewers, because I'm going to give them to you, both the haves and the have-nots. First, why don't we start with something positive? Let's start with the haves. Sorry, I know it's overdone, but the most haves are the Magnificent Seven. Let's start with Apple. This company's crushing it because it's got the best subscription product in the world, and it keeps adding great content and therefore many more subs. We just heard today in David Faber's excellent interview with Disney's Bob Iger that he needs partners for sports. Can you imagine running live sports through new Vision Pro with Apple making money on the subscription side? You'll be on the sidelines, not in the peanut gallery. And trust me, once you've worn the Vision Pro like I have, life will never be the same again. It is that incredible, hence the sky-high price tag. Don't forget, Iger was in the introduction video for the product. Doesn't that suggest a potential Disney tie-up with Apple? Second is Alphabet, which is increasingly known as an AI winner, not a loser, one that can leverage generative AI to make people and companies smarter. I don't think they are as AI savvy as Microsoft, but investors are flocking to the company because of its long-time prowess, as unknown as it seemed to be until fairly recently. Amazon! Hey, it just had an amazing Prime Day. Best numbers ever, showing you once again that e-commerce is incredibly strong. I think Amazon Web Services, which is still in declining growth mode, will turn things around, not this quarter, but in the fourth quarter. So the stock has to be bought now in anticipation of that turn. Meta, it's just going nuts, people. That's because we know it is cutting costs aggressively while revenues are accelerating, thanks to Reels, their TikTok killer, and also Instagram, which advertisers are happy with again because they've come up with workarounds against Apple's privacy restrictions.
House of pleasure.
Who knows how great Threads can be, given its mandate to be a kinder, gentler Twitter, one where you can post and read comments without feeling like you're swimming in the Gowanus Canal. That air don't matter. Tesla. What can I say? It's the lowest electric vehicle market after all these years, where it's lowering prices, admirably defending its market share. The internal combustion engine folks are all still way behind and can't scale up to production. They just can't. They can't do it fast enough. Hey, one day they will, but not now. Microsoft's ridiculously strong. It's got the best AI. It's also got a hammerlock on all of its businesses. I just wish they could make it so the team stops popping up every time I turn on my PC. How bad is that for Zoom? And that silly news page they put together? I mean, how do I get that? Hey, can you get IT to take that? I can't. IT is not strong enough to stop the junk that Microsoft puts into my PC. But how about this one? NVIDIA. Okay, enough said. No, really. NVIDIA is the most spectacularly obvious winner in ages. Oh, and let's just add some smaller contenders that are magnificent to them, and let's call them Magnificent Seven adjacencies. Oracle, which has edged its way into the cloud conversation. Hey, how about Salesforce, ServiceNow, two of our old favorite cloud kings? They're winners, along with Adobe, which needs to be considered a winner thanks to its powerful new AI-powered Firefly product. By the way, did I mention NVIDIA? Next group of haves, travel and leisure. This is the long on money, short on time thesis I keep propounding that others now want to call revenge travel. I like my notion better. I think mine more captures the kind of zeitgeist of the moment. If you look at Delta Airlines today, it crushed the numbers that it was just laid them to waste. It was an amazing beat. Why? Because people want to see the world while they're still alive and healthy enough to do it. And what's true for Delta, of course, will be true for every other airline industry in boom mode. Frankly, anything that has to do with travel and leisure is a winner, whether we're talking about Booking.com or Airbnb or Carnival Cruise or Marriott. They all work. Hey, so do Chipotle and Darden. because they're publicly traded places where people go in order to have a great experience dining without paying a fortune. Now, I'd like to include American Express as a travel play, but I worry the market is so concerned about potential credit issues that I'm not worried about. But who am I? I'd rather have DraftKings, or, speak of the devil, any casino, Wynn, MGM, or Las Vegas Sands. Hey, let me give you some new ones. Avis and Hertz. I've been pushing this Hertz for a while. They've been flogging it. It's been really killing me. But now these two stocks are being realized as cheap. Now, of course, I'd like to include Disney in the haves, but it needs to buy sports programming, and the Screen Actors Guild just went on strike. And it's linked to cable, which is way too hard right now. It's got an ugly balance sheet, at least for a while. Then there are the semis. Ah, the semis. Not too long ago, we had a semiconductor glut. Now they're coming out of glut mode. I like Micron, AMD, onsemi, Texas Instruments, Marvell Tech, Lam Research, Broadcom, and of course, go ahead, let's hear it, NVIDIA. See the theme there? Next up is home builders. Now, look, you take mortgage rates up to 7%. It's supposed to slow the group down, right? Nope. Mortgage applications that came out today actually increased this week. This is crazy. What a nightmare for the Federal Reserve. But not for you if you own Toll Brothers, Lennar, Pulte, Horton, Wintersall. And now we have to add medical devices and friends to the list of haves because people are going back to the hospital for non-urgent surgery now that COVID's over. I like Edwards Life Sciences, Stryker, Intuitive Surgical, and the hospitals like HCA. Well, could all be winners because that's where you go to get your medical devices implanted. All right, now let's address the have-nots. Sell. First, we have the flip side of the medical device bull market, the health insurance bear market, because they're paying for all these operations. We'll find out how long this group could stay in bear market mode, or at least in the Bow Wow Chateau, when United Health gives us its latest outlook for like 24 hours from 12 hours from now. This group is so shockingly weak that it's even getting killed by pickleball injuries. You know, I wanted to play pickleball this weekend. Do you know you have to have whites to play pickleball at the place I went? I don't have any whites. I don't know what I have. Second, Dumb and Dumber. AT&T and Verizon. Yep, phone companies. They have some of the most withering earnings power I've ever seen, and now they need to be concerned about decades-old cables covered in toxic lead. Anyone with a law degree must be feeling like, ooh, I want to sue these guys. Hey, I do, and I never practice. Third, banks. The regionals, not the nationals, as JP Morgan hit a 52-week high today. But the smaller banks, they're being crushed. I think they'll be ridiculed when they report because they aren't going to be able to handle all the new regulations coming their way, not to mention continued deposit worries, $250,000 FDIC cap. What a nightmare. Fourth, drug stocks. The federal government's negotiating prices for Medicare under the IRA. The FTC is trying to block mergers. And next year's an election year where Big Pharma tends to become a public enemy, like a piñata. These stocks can't get out of their own way. What a nightmare again. Black Mirror. Fifth, the bond market equivalents. That means the staples, including, let's exclude the fabulous PepsiCo. Also, I don't like the utilities. They're a disaster. Dividend have-nots. The staples can't justify the price earnings multiples, and their dividends just aren't big enough to protect you. Finally, six are the retailers. They can't seem to stabilize no matter what. Kohl's, Target, Nordstrom's, Macy's. Enter at your own risk. Bad back-to-school season. Students have to pay back their loans. Boy, how do you like that? You have to pay back your loan. What a crummy deal. Brick and mortar's being eviscerated by Amazon. Retail? Funeral invitations, anyone? Now, I know this is a glib list. It's preposterous that things can be this cut and dry. There are exceptions, as I mentioned, with PepsiCo. I think Costco will do well, so will Walmart. But the bottom line, this market's really about as clear as I've ever seen it. The funniest thing, or some would say the oddest thing, everything you ever hear about the economy, whether it be the Fed or inflation, the yield curve, has almost nothing to do with what's actually making you money. Nothing. Because it's arbitrary, it's capricious, and at last, it's bangable. Mandy in Maryland. Mandy!
Hi, Jim. Boya, thank you so much for taking my call.
Oh, thank you, Mandy.
Thank you for all your advice and saving us from ourselves, for not losing more money than we have to.
That's what the game's about. Thank you for understanding, and thank you for being our first caller tonight. How can I help?
Thank you so much. I have stocks in shares of Home Depot and Lowe's, and I was wondering, I would like to add and buy some more of F&D, Floor and Decor.
I got to tell you, this Florida Decor is a pretty good outfit. You know, initially, I was a little suspect. I am still a Lowe's guy right now. I think that Lowe's, Marvin Ellison's doing a great job, but there's nothing. What can I say? Florida Decor are the two areas, Decor and Florida, that are doing really well at the Home Depot and Lowe's. I'm not going to argue with Mandy. I think Mandy has horse sense. All right, everything you ever hear about the economy, whether it be the Fed or inflation or the yield curve, means nothing, at least when you're trying to make money. That's because what really works is arbitrary, capricious, and I just gave you the list. It's called bankable. On Mad Money tonight, we're wrapping up our series on legislation beneficiaries by identifying some miscellaneous themes that are poised to benefit from a new flow of government spending. Then bonds, treasury bonds. After a tough stretch for long-term treasuries, could things be looking up in the long run? It'd be a shocker, wouldn't it be? Let's go off the charts to find out. Yesterday, we learned about a major cybersecurity breach within the federal government, with hackers getting access to a host of email accounts, including that of Commerce Secretary and Cramer fave Gina Raimondo. I'm learning more about how something like this happened and how we can prevent it with none other than Cramer fave Palo Alto Networks. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.